Hello friends, a very warm welcome to my channel. In today's video, we are going to analyze another public sector enterprise, that is Mazagon Dock. So this stock has given very good returns in the recent couple of years because it is a dual theme stock. It's a public sector enterprise and it's a defense theme stock. So both of these themes have given good returns. So for those who have missed this rally, we are going to discuss whether there is still an opportunity to enter the stock at the current levels in terms of valuations or not. If you're new to the channel, please do subscribe and hit the bell icon, and if you're not a part of a Telegram channel, do join today by using the link in the description section so that you join the correct Telegram channel, because on the Telegram channel every day morning we discuss the market analysis which will help you manage your portfolios much better. So let's begin the analysis of Mazagon Dock. This will be the flow of our presentation. We'll start by discussing the business model in brief. We'll understand how the stock has performed in the last couple of years. We look at the main financial parameters, how the company is performing. We understand the reasons why the stock has given massive returns in the recent past. What is the outlook of the management going forward? We'll discuss the valuations at the present levels. We'll understand the risks of investing in this company and we'll form an overall view after this discussion. So it's a public sector enterprise classified as a mini Ratna company. This is the only company in India which is capable of manufacturing destroyers, submarines for the Indian Navy, and it has also capabilities to manufacture Nilgiri class stealth frigates. So frigates are also one kind of warships. From 1960, this company has manufactured and delivered more than 800 vessels to the Navy, and at a single time it has the capacity to manufacture 11 submarines and 10 warships simultaneously. So these are the products which this company has capabilities to manufacture: naval platforms, merchant ships, as well as the ships which are used in the oil sector. So naval platforms contains the ships which are mainly used in the defense sector, then merchant ships are used as cargo vessels and for different logistics purposes, and it has also capabilities to manufacture oil rigs, etc. So if you look at the performance in the last 3-4 years, earlier after listing, the stock went to a sideways consolidation for some time, but thereafter when the theme actually picked up and the government started promoting Make in India and they increased the investment in the defense budgets, this company started getting massive orders, and that led to the improvement in the financials of this company and also led to the re-rating in the stock. So the stock which were consolidating at less than 250 zone earlier shot up to almost 2500, which is 10x. So this has given massive returns in the last couple of years, and thereafter we saw some correction, and right now it is trading at somewhere around 2100 rupees. Technically, if you see at 2500 zone, the stock is facing resistance and there is profit booking, and there is a possibility on the charts that this can form a double top and come down to somewhere around 1700 kind of levels. If you look at the revenue growth, pre-COVID it was not much, but post-COVID suddenly we saw sharp rise in revenue from about 5,700 crores in FY22 to almost 7,800 crores in FY23, and in trailing 12 months again it is expected to be slightly better than the last year. In terms of EBITDA, we saw margin expansion, and the EBITDA rose from 226 crores in FY21 to almost 855 crores in the trailing 12 months. We saw a steady margin expansion from about 5% EBITDA level in FY20 to almost 11% in FY24. So the margins have almost doubled in the last 5 years. One thing you should notice that the government still holds somewhere around 85% in the company. So gradually they will reduce this holding to below 75. So there is a risk of OFS which will act as a hangover on the stock. Generally in the defense sector and this specifically shipbuilding industry, they have to maintain the components for construction. The raw material requirements are also more, and during the construction and post construction, during testing and delivery, it takes a lot of time. That is why the working capital requirement is high, especially in inventory. So you see the inventory days of this company at somewhere around 600, which is very unusual in any other industry. Now, why did the stock give almost 10x returns in the last 3-4 years? If you remember, we discussed about a recipe of multi-bagger, which is revenue growth, margin expansion, as well as the re-rating of the PE multiples. So exactly this has happened in this company. The revenue showed steady growth, the margin of the company nearly doubled, and the re-rating in the PE has happened, which we will discuss in the valuation slide. So due to the combination of all these three factors, it led to these kind of returns. Along with this, the government is now focusing on Make in India. So in fact, the components which were imported earlier and the ships were built in India, nowadays the government is insisting on manufacturing the components also in India. So working on that, creating a separate department. Mazagon Dock has reached to an extent of making 75% of the components in India itself. And as we discussed in the beginning of the video, defense and public sector as a combination also led to the tailwinds of giving this returns in this stock. Now going forward in the next few years, what can we expect in terms of growth? In this year, FY24, the company is giving a guidance of about 12 to 15% growth in the revenue compared to FY23, and going forward, looking at their order book of almost 37,500 crores, you can expect a steady growth in the revenue in the next 3 to 5 years as well. Further indigenization of all these leftover components also will increase the consumption of the products manufactured within India. That will also lead to higher revenue for Mazagon Dock. If you look at the valuations earlier, this company when it got listed, it used to trade at single digit PE multiples, and thereafter, as we saw the re-rating, the valuations massively, in fact nearly tripled or quadrupled, and it went as high as 40 times earnings multiple, and right now it is trading at 34 times the earnings. So you will notice that, as we have discussed earlier, the revenue has grown, the margins have expanded to more than double, and the pre-rating has also happened 3 to 4 times. So these three combination led to this kind of returns, and now this trades almost as good as the other private sector companies. So if you choose to invest in this company, what could be the possible risks if there are any changes in the government policies that could have a direct impact on a public sector undertaking like Mazagon Dock? They are getting huge number of orders, but execution of these orders to the perfection, because there can be no compromise in a defense sector. So execution of these orders in terms of quality as well as timelines will be a challenge for this company. Managing the working capital also will be a challenge, as they have to efficiently manage their inventory. And from an investment point of view, there can be an overhang of an OFS in this stock. So now, after understanding the business model of the company, the main financial parameters, the growth prospects and the risks, looking at the valuations, what should you do as an investor in this company? If you're already holding the stock, you should continue to hold that, because the company still has an order book of more than 37,500 crores. So there is a visibility of growth in the next few years as well. So you should continue to hold the stock, and the valuations are also not that expensive compared to the private sector companies which are getting higher multiples in the defense sector. But if you are somebody who is looking at a fresh entry in the stock, you should wait for some correction, because the PE re-rating has already happened, and from here onwards you can expect growth equivalent to the revenue and profitability growth only in this company. So it will be wise enough if you gradually accumulate, or you wait for some correction in the stock and then you start taking it. Please do note that this is not a buy or sell recommendation. We are only discussing for a case study purpose. So that's about Mazagon Dock. I hope you like the crisp analysis. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names in the comment section. Thank you for watching and have a wonderful day.